Welcome back to the channel, guys. Today I'm doing my top 3 option plays for the week. This is where I go over a couple plays I'm looking at putting on next week, and they fit my risk profile. If they fit yours, maybe you can do them too, but make sure that they fit your strategies and what your goals are. So first off, we have Beyond Meat. Let me go ahead and make this big for you. And I'll be looking to sell a put on these guys. Beyond Meat's been trending down, but I think we're finding some support here. The volume profile is just kind of showing that 69 is like a fair price target in the short term. Implied volatility is up. If we look at last year's historical, looking at the pink line now, it tends to drop here. So I think there's a possibility to win early from an IV decrease or volatility decrease. RSI is slightly oversold, but it's pretty neutral there. So just a bunch of indicators saying it's going to go up here. We found some support. So I think selling below 60 would be good. But I think there's actually enough IV here. We might be able to get safer than the 60 strike. Let's go ahead and take a look at that real quick. So if I'm going to trade this, I'm going to go to the options. I was looking at January 21st because I like to look for monthlies. And if we look at the 60, which I'd be okay with, you get a pretty big return here, 3% for a 1 month hold. If you do 60 times 3, that's 180. So if you could fill up the bid, like that's pretty good. But since we can, why not get safer? And I might even jump to the 55 or maybe do 2 contracts at the 50 and just let that sit there and cook. And if you look at the delta is 8, so there's like a 92% chance of it being out of the money. So if you go ahead and look at the probability of out of the money, 87% chance here. Delta's 8, so that says 92%. I wonder why those are so different, but basically 90% chance of it being out of the money if we do the 50, 55 if you just want to do 1 contract. I will probably do one of those 2. I'm not sure which one. We'll see on the day of, on Monday. All right, so next up is the Snowflake Company. This is a cloud computing company. And basically, they had a double bottom here that they bounced off of. I think in the short term, we're going to see an increase. Now, I don't even care if we go up to the 4 or 5, but what I'll be looking to do is a bull zebra. And basically, it's a zero extrinsic play where I try to get $100 per dollar movement. It's as though you own 100 shares without putting up that much, and you have to find risk to the downside. So, I'll be looking for a small jump up in the next week or 2. And my price target, I'm going to use the Fibonacci to find out. Put that up to the high here. And you can see a couple times it's respected this line at the 380 mark or 378. So I'm going to be a couple bucks lower than that. So let's just say 375 for a safe, let's just say 170. Let's be even safer. Like we don't have to go for a home run. So 370, right now the price is 350. That's a $2,000 gain for every zebra that you put on. So that's going to be my price target for this. To set this guy up, what I'm going to be doing is looking 40 days out. Come on. And I'm bullish, so what I'm going to be doing is selling the 350. And then I look at the extrinsic value column, 23. I'm going to find the strike that's equivalent to it, where it's like times 2 on this column equals this. So 23 divided by 2 is about 11. So 1168 or 1043. I'll probably do the 315 strike here. So I'll buy 2 of those. And then if I go to the risk profile. All right, so as you can see, we got that $100 gain per dollar movement. If the stock moves up to 370, which is where we're going to put like our fill order at. If you look at that blue number on the bottom left here, that's what we could probably close this at. And that's about $1,600. So when I put this trade on, I'm going to immediately put a sell to close order to fill for $1,600 and just let it sit there and see what happens. I'll be looking to get out of this within 2 weeks. If the movement doesn't happen, I'll just get out, take whatever loss would be. And since I set this date to like the end of next week, the pink line represents what the loss would be. So say Snow went down to 330, now it's completely wrong. My max loss on that would be about 2,400. So the way the delta works, I lose slower than had I owned 100 shares. Whereas I still get the main benefit of owning 100 shares by sitting up through the zebra strategy. If you want to learn more about the zebra strategy, I'll leave a video at the end of this video, or a link at the end of this video that you can click on. So next up is Etsy. I think that's another stock that's going to move up in the short term. You can see that we just hit support and we're bouncing up. And over the course of the last year, that support is pretty huge. So if it does come back down, a lot of price action before it drops down. RSI shows that it might be slightly oversold, so that should help trend upwards. So this is another one I think is going to move up in the short term. So there's kind of two different plays I'm debating about doing on this one. One is just simply selling a put. Let me go back here. And where's 200 at? Yeah, look at all this action here. I'm looking at like 200 would be where I want to sell a put at. So a month out, 200 sells for 370, 17 delta. So that's even pretty safe for me. So that might be what I end up putting down as the 200 put on Etsy for January 21st. Let's make sure there's no earnings until February. Okay. The other thing you might want to do, or I might consider, would be selling another or buying another bull zebra. And if I was doing that, I would sell the 227 and then buy two 210s. And then for about $5,000, you set up that same kind of P&L that you did with Snow, where any dollar it moves up, you make $100, but your max risk is 5,000. So both of those plays seem like legit ones on Etsy. Okay, so if you want to learn more about the bull zebras, go on ahead, watch this video. Stay safe next week, guys, and Happy New Year.